How do you invest in stocks? Investing in stocks can be a lucrative endeavor, offering the potential for significant financial growth. However, it also involves inherent risks. Before diving into the world of stock investing, it's essential to understand the basics, potential benefits, and potential drawbacks. Did you know that a single share of Amazon stock purchased in 1997 for just $1 would be worth over $20,000 today? This staggering return underscores the potential rewards of investing in stocks. On the other hand, the dot-com bubble of the early 2000s saw many tech stocks plummet, resulting in substantial losses for investors. These examples highlight the dual nature of stock investing, the potential for immense gains and the risk of significant losses. When investing in stocks, you essentially become a part owner of a company. This ownership entitles you to a portion of the company's profits, typically distributed as dividends. Additionally, as the company's value increases, so does the value of your shares, leading to capital gains. However, it's crucial to remember that the value of stocks can fluctuate significantly due to various factors, including economic conditions, industry trends, and company performance. One of the primary advantages of investing in stocks is the potential for high returns. Over the long term, stocks have historically outperformed other investment options such as bonds and savings accounts. This is because stocks offer the opportunity for growth as companies expand and innovate. However, achieving these high returns requires careful research, diversification, and a long-term investment horizon. Another advantage of stock investing is the flexibility it offers. You can invest in a wide range of companies across different industries and sectors, allowing you to tailor your portfolio to your specific financial goals and risk tolerance. Additionally, stocks can be bought and sold at any time, providing liquidity and the ability to adjust your investments as needed. However, stock investing also comes with its share of disadvantages. One of the primary risks is market volatility. Stock prices can fluctuate significantly in a short period, leading to losses. This volatility can be particularly challenging for investors with a short-term investment horizon. Additionally, investing in stocks requires a certain level of knowledge and understanding of the market. Without proper research and analysis, it can be difficult to make informed investment decisions. Another disadvantage of stock investing is the potential for fraud and scams. There are numerous fraudulent schemes targeting investors, including Ponzi schemes and pump-and-dump schemes. It's essential to be vigilant and conduct thorough due diligence before investing in any company. To mitigate the risks associated with stock investing, it's recommended to diversify your portfolio by investing in a variety of stocks across different industries and sectors. This helps to spread out risk and reduce the impact of any individual stock's performance. Additionally, it's important to conduct thorough research on companies before investing and to stay informed about market trends and news. In conclusion, investing in stocks offers the potential for significant financial rewards but also involves inherent risks. By understanding the basics of stock investing, the potential benefits, and the potential drawbacks, you can make informed decisions and develop a sound investment strategy. Remember, investing in stocks is a long-term endeavor, and patience and discipline are key to achieving success.